Datavault AI Inc., trading under the ticker symbol DVLT on the Nasdaq, opens the trading session right now at 0.2996 per share, matching its previous close as market liquidity builds and participants weigh its underlying mechanics. Beneath this seemingly quiet sub-dollar price print lies a fascinating tension between what retail onlookers assume about speculative micro-cap tech listings and what the underlying corporate architecture is actually attempting to build in the data monetization space. When observing small technology equities, the common assumption is that these firms are merely drifting on the tides of retail sentiment, surviving from one dilution announcement to the next without structural support. Yet looking closer at the operational mechanics reveals a distinct push toward high-end cryptographic data management, artificial intelligence agents, and real-world asset tokenization platforms that challenge superficial assumptions. People often look at a stock trading under 50 cents and write it off as a simple trading vehicle, completely ignoring the strategic positioning happening behind closed doors. To understand where this enterprise stands today, one has to strip away the emotional noise surrounding low-priced equities and examine how institutional routing, liquidity providers, and retail participation intersect through platforms like Robinhood, SoFi Invest, and Fidelity brokerage accounts. Many self-directed traders utilizing online investing tools through Fidelity platforms or interactive brokers' trading accounts often treat microcaps as lottery tickets, failing to analyze the intricate balance sheet shifts and technological pivots that define corporate survival in competitive technology sectors. The daily trading volume for Datavault AI Inc. reflects a constant tug-of-war between short-term momentum traders looking for rapid intraday swings and longer-term stakeholders betting on enterprise adoption of data valuation protocols. Market participants tracking these movements across individual brokerage options frequently encounter sharp volatility spikes driven by microcap liquidity constraints, where relatively modest order sizes can sway the intraday price path significantly. When executing trades via online investment platforms or managing portfolios through a Schwab Intelligent Portfolio or independent advisory setups, understanding the order book depth becomes essential. Most observers expect sub-dollar stocks to exhibit purely erratic behavior governed by chat room chatter and social media hype cycles. However, the reality of the situation points to a deliberate corporate strategy involving patent portfolios, cloud-based data exchanges, and enterprise-grade software integration designed to appeal to institutional compliance standards. This friction between the low stock price expectation and the high-tech reality creates a compelling case study in market psychology. While retail traders utilizing the Robinhood app or SoFi trading platform might focus entirely on percentage gains, institutional participants evaluate the underlying infrastructure, intellectual property assets, and scalability potential of the firm's data management solutions. To gain a truly comprehensive perspective on how modern equities behave, many investors diversify their approach by exploring various asset classes and custody solutions, ranging from traditional retirement accounts like Fidelity IRAs to digital-first applications offering fractional shares and automated portfolio rebalancing, similar to a SoFi robo-advisor or Schwab Intelligent Portfolios. Comment below how many shares of Datavault AI Inc. you currently hold in your portfolio. When examining the broader ecosystem of online trading platforms, whether someone is utilizing interactive brokers for advanced options routing, executing simple equity orders through a Fidelity mobile app, or managing cash yields via a Robinhood cash management feature, the fundamental challenge remains separating market hype from operational execution. The current intraday movement of DVLT is heavily influenced by broader sector sentiment surrounding artificial intelligence applications, data privacy compliance, and blockchain-based tokenization frameworks. Technology stocks operating in the artificial intelligence and data governance sectors face immense pressure to prove that their software offerings can generate sustainable, recurring revenue streams, rather than relying solely on speculative partnerships or non-binding memoranda of understanding. The core of the company's business model revolves around its proprietary platforms, including DataScore, Data Value, and ADIO, which are engineered to help enterprises value, secure, and monetize their corporate data assets. Organizations across North America, Europe, and the Asia-Pacific region are increasingly grappling with stringent data privacy regulations and the immense challenge of extracting actionable intelligence from unstructured information repositories. Datavault AI positions its technology as a secure bridge that allows businesses to unlock the economic value of their information without falling foul of regulatory compliance frameworks or compromising user privacy standards. This involves sophisticated machine learning models and high-performance computing capabilities designed to process massive datasets efficiently. Historically, the corporate entity underwent significant transformations to reach its current operational focus. Originally incorporated under previous iterations that focused on wireless audio technologies and semiconductor solutions, such as its time operating as YSAW Technologies, the organization executed a strategic pivot through asset acquisitions and corporate rebranding to center its entire identity on artificial intelligence and data sciences. This historical baggage often creates skepticism among long-term market watchers who remember the previous iterations and the associated equity dilution, forming a powerful prevailing narrative that the company is merely recycling an old public shell to chase current technological trends. However, looking past the historical corporate trajectory reveals a systematic effort to transition into a pure-play data monetization and real-world asset tokenization infrastructure provider. The macroeconomic pressures facing microcap technology firms cannot be overstated, as higher capital costs, cautious institutional lending environments, and rigorous regulatory scrutiny place a premium on balance sheet resilience and clear paths to profitability. Investors engaging in self-investing via online platforms must constantly weigh these macroeconomic headwinds against the specific catalysts boasted by individual management teams. Looking toward the future outlook for the company, several critical scenarios emerge that will determine whether the enterprise can bridge the gap between its ambitious technological vision and its current market valuation. Catalysts on the horizon include potential enterprise contract announcements, broader adoption of its data exchange architecture, and the successful scaling of its tokenization protocols across industries, ranging from digital marketing to real estate and intellectual property licensing. Yet significant risks remain, including the persistent threat of equity dilution to fund ongoing operations, intense competition from established cloud giants and enterprise software vendors, and the inherent volatility associated with microcap equities listed on major exchanges. By contrasting the prevailing market skepticism with the tangible operational developments occurring within the firm, investors can better navigate the complex dynamics governing modern digital asset and artificial intelligence stocks. Ultimately, navigating equities of this nature requires a disciplined adherence to risk management, a clear understanding of liquidity dynamics across modern brokerage ecosystems, and a steadfast refusal to let short-term price fluctuations overshadow long-term structural realities.